All right. Welcome back to another video. Today, or in this one, we are going to be going over the Fibonacci ratio, Fibonacci retracements. One of my favorite tools over the years to utilize was the Fibonacci tool, and I still use it to this day. The amount of setups that come from Fibonacci is unreal. The utility of it is immense. Like, you can use this Fibonacci in so many different ways that I'm super excited to show you exactly how to apply it in the markets, and learn a little bit about obviously the science behind it as well. Why 618, why 50%, why retracements, what exactly Fibonacci numbers represents. So let's go ahead and get right into it. I'm going to share my screen, and we're going to go over the slides. The slides are very important in the first one here. I hope you guys do not get tired of the slides. I know it can sometimes feel a little redundant with the slideshows, but it's not meant to be like that at all. So if you've never heard of Fibonacci before, maybe you have. It is a sequence and a series of numbers in which each number is the sum of the two preceding ones. So it starts with 0 and 1, and each number is found by adding the two numbers before it. So for example, right, we start at 0, and then we go up to 1, right? So 1 plus 1 plus 0 is 1. So remember, it's the number subsequent by adding the two numbers before it, right? So 1 plus 0 is 1. 1 plus 1 plus 0 is 2. 2 plus 1 is 3. 3 plus 2 is 5. And 5 plus 3 is 8. 8 plus 5 is 13. 13 plus 8 is 21. 21 plus 13 is 34. This goes all the way to infinity. So you're adding the numbers subsequent and previous before it. And so this creates the Fibonacci sequence, right? And this sequence of numbers occurs in nature. It occurs in natural phenomena, like the growth patterns of plants, the spirals of shells, the proportion of animal bodies, and it has a significant application in mathematics, computer science, number theory, and coding. When I look at, I think one of my favorite patterns is actually like the snowflake, or even the bark of a tree, because what you notice is you look at the pattern, and the pattern just keeps going. No matter how big it is or how small, that pattern is continuous. Another way to think of Fibonacci is if you live by the beach and you go pick up a seashell, and you see this spiral within the seashell. That spiral is ever going. It's eternal, right? And this is because of the numbers in the ratio of that pattern. It's super fascinating to dive into Fibonacci. So Fibonacci retracement levels are horizontal lines that indicate potential levels of support and resistance within a price trend. These levels are drawn by identifying high and lows in a price movement, and then applying the ratio from bottom to top or top to bottom, and looking for percentages within that range. And it'll be easier for you to see on the example of the chart when we hit the chart. But let's say that price reaches 23.6 and it hits that level and decides to continue in the trend. That is always a possibility. Same with 38.2, 50%, 618, and 78.6. So traders believe that these Fibonacci levels are representative of where the price is likely to reverse, consolidate before continuing in the direction of the trend. So let's see, blah, 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 just more of this that I typed up. So traders often look for Fibonacci extension levels such as 127.2, 618, 1618, and then 2618 as potential areas where price will encounter resistance or support. So it's much easier to see it once you were, did I stop sharing my screen? I did. I apologize. Once we hit the chart and once I show you the chart, it'll be much easier to understand how it works. I don't know in the previous videos if I've used it at all. I'm sure I have a couple times, but we're going to really put it together here and how to utilize it. So on TradingView and even on MetaTrader, whatever trading platform you have, most trading platforms have Fibonacci tools on them. Over here on TradingView, it's on the left-hand side. It's going to say Fibonacci. You actually have quite a few of them. Fib spiral, Fib circle, blah, 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 blah. All of these down here, I haven't found use for. I'm sure there's a use for them. I just happen to not have a use for them. I simply use my Fibonacci retracement tool. The first time you use it, it will look a little different than mine. I have adjusted the settings. So you can left click it and go to settings, and then you can adjust and pick the ratios that you want on your Fibonacci tool. I happen to have coded mine a certain way to my liking and to what I use or analyze as best. So how the Fibonacci tool works is you take the movement in a trend. So let's say we're looking at just this area here on Euro USD, and I want to look for a buy because I'm noticing higher highs and some lower lows, right? So boom, I believe, my opinion is that we are in an uptrend, right? So boom, we're in an uptrend. That's my opinion. What I'm going to do is I'm going to look for the high and the low of the first initial uptrend, right? So this right here gets taken out here. Yes, we agree on that. So this is now a new high in the market. This is our previous low, or this is our previous low. I'm going to use this one just because this one looks a little more manipulated. This low looks a little more manipulated. It looks like there was some news event here that made price drastically move to the downside like that. So we're going to use this area here, right? So from this low to this high, we're going to take our Fibonacci and we're going to, where we clicked on it, we're going to take it and draw it from this low. We're going to click and draw it up to the high. Boom, right here. And we're going to extend it out. Okay, so notice how we're covering the entire area of this part of the trend. And then it gives us what? Ratios in the middle, right? So if you and this is when Elliott wave pattern comes into play. I'm also going to use the Elliott waves to kind of just share with you, right? So this is 1, this is 2, this is 3, 4, and then 5 somewhere over here. So what can you notice here? The ratio is 38%. So imagine that, right? So it's in an uptrend, boom, it makes a trend upward, hits a resistance here, and now it starts falling. Where can we look for a potential buy position, right, in this market for the continuation of that uptrend? That is what we're looking for. The Fibonacci tool gives us ranges that would be optimal to take a buy position. So when the market creates that high, finds resistance, and starts to retrace, and you see these selling candles appear and generate, where do we want to look for buys? At the 382, so 38% retracement, 50% retracement, or 618 retracement, right? The golden ratio is 61.8. That is the ratio at which, within patterns, scientists have discovered the 61.8% ratio appears more than any other ratio out there. 61% is the golden ratio. And so if you were to just take trades at 618 every single time, you'd have a pretty okay success rate. Now, price isn't always going to hit the 618. Sometimes it overextends over the 618. So what I like to use is I like to use my structure that we've learned in previous lessons, my support and resistance, and use that in confluence with my Fibonacci ratios. So I'm looking for a buy position. I'm looking for this second wave, Elliott wave. I'm looking for where I possibly think it will hit and then turn around and continue in the uptrend. If I scroll out and I look, we have a resistance here, right here, that is above the 382. So I'm not going to take it there. Okay. We have a beautiful level of resistance and support at this 618. And what I mean by that, right? Look here. Okay. When price was trading over here, we had a nice reaction off of, what is this? 1.05177. You see this wick right here, this one wick, and then again, it retests it twice. So like, just to zoom in a little bit, look at the price action here. Okay. This is the importance of price action and structure. This wick resists off of the line. This buy wick resists it again. Once it breaks the white line, what does it do? It retests it as a support. Notice how do I say this? Notice how the candlesticks print in a way that shows that this is an important level. Try to make that so clear for you guys. Now let's draw that white line out a little bit. Price does trade below it and then it has another wick that just rejects off of it, right? Price trades back into it here. So we're following along. Price trades back into it. Resistance, it's selling from this point, right? The 1 hour candlesticks are rejecting the line. Once price breaks above it here, see how the wicks are supporting off of the white line? You see that? So boom, supports. Now, it does come back through again, the manipulation here. This is a 1 hour sell candle to a 3 hour very bullish series of candles. Look how it just retests it as a support. So it's supporting this level, right? And once the market kind of takes off away from that area, we get that first, we get that first Fibonacci retracement level on the higher scale, the bigger, the bigger view, the big picture, right? And it creates these large sell candles. And where does it want to come revisit? That same area where there is a important level of buying and selling. Now, not only does it coincide with price action in history, right? In the past, we take that Fibonacci and that 618, the golden ratio, happens to align with that white support and resistance level, that white structure line, right? And you'll notice that even though price dipped just a little bit below it, it still held above the 618. And actually, initially, the 1 hour candles hit that white line in that 618 and went up for about 28 pips before dropping, finding buying support, and then initially buying up, almost retesting one more time, and then continuing to make that third leg in the Fibonacci or in the Elliott wave sequence. So that's kind of an in-depth way of using the Fibonacci tool, is finding that retracement level in confluence with structure of the past. This is one of the best ways to use Fibonacci. Now, let's go a little bit more in depth, right? Remember how we can kind of fractalize the Elliott waves, right? And you're noticing the pattern start to form. There's waves within waves, right? And this is when it gets complicated. Most traders take time to learn this type of material. This type of technical analysis does not come easy. It takes a lot of practice. It may not even be making sense to you right now, what I'm explaining to you. However, we're going to continue on and just continue to practice, continue to mark up the charts. Time on the charts is going to benefit you greatly in the long run. So let's say we have this second wave now, right? And we have that 618 retracement. We're looking for buys. When you continue to see that the second wave is starting to trade higher, you can still do waves within waves. So we have our 1, our 2, our 3, our 4, and our 5. This fourth wave was definitely some sort of uniqueness within the market. You cannot really explain why it wasn't above the second, right? Because remember, for it to be a true Elliott wave, that fourth leg has to be above the second wave, right? Now, however, let's take that Fibonacci. Let's draw that fib from this low to this high and look for that Fibonacci retracement, right? It comes to the 38.2%. So to create that second wave higher, it does respect the 382 and it goes for 58 pips before making that third high. Now, let's say we're doing the same thing. We're looking for the fourth leg retracement and we draw our fib from 2 to 3, right? Look at that. It has a reaction at the 382, continues to sell, has a reaction at the 50%. That was kind of a bad 50%. See how it has a reaction there? It trades higher, but then it just drops. It has a small reaction at the 618, but then continues to drop further before finding support lower. Sometimes that's just how trading goes. You look for a buy and you take the L. You look for the buy in the trend and you take the loss on that one. Price after that fourth leg, right? It finds support, just trades higher, and you're like, damn, I can't believe I just missed that, right? No worries, right? You have that higher high get created. You take your Fibonacci from that fourth leg to the fifth leg, and you look for that retracement once again, and you see that it makes this high here. Price trades lower, doesn't support off the 382, and supports off the what? The 50%. Doesn't quite come down to the 618. Does not come down to the 618. It comes to the 50%. And if you look, there is really good structure here at the 618. Really good structure. We even have a massive gap here that the market created, which is kind of like a, what's it called? It's not really an imbalance. It's just called like a disparity or kind of like, gaps in the market. But notice how there's some good structure here in the market where we have really good support and resistance, right? We draw that level out. We see that price supports here, resists here, supports here, comes up resistance and then support. And so, like I said, we're using that in confluence with our levels. So boom, price trades higher. And then we have that third wave get created. Now, let's go zoom out again, right? We take our fib from 2 to 3 and we look for that retracement once again. Man, that fourth leg just not giving us any respect. And that's the uniqueness of the market, is it's not always going to respect the levels like we may want it to. Price trades down, comes into that 50%, does not have any buying support at all. Comes down to the 618. It has a little bit of buying. Price trades 23 pips higher before just continuing to drop. And price does find support lower at the 105 level that we said was very significant earlier on. And sometimes that's just the way the market goes. None of the ratios got respected at all. It almost did a full 100% retracement. That looks like about an 80% retracement, right? And then it continues to go ahead and make it actually doesn't even make a fifth wave. Within this sequence of an Elliott wave pattern, it does not make that higher fifth wave up until here. And so all of this within the fourth leg is just a mess because it's not flow. It's not a flow within the market. The candlesticks and the volatility right in here is just really sloppy, and it's hard to trade that kind of stuff. And that's what really differentiates a good trader and an average trader, is knowing the news events that are happening to create this type of movement here, because this is all manipulation. This type of selling to then buying again is straight manipulation. There is nothing more to say than just absolute manipulation right here. And so anyways, you know, we end up completing the fifth leg, right? You can see that it's actually a pretty good looking Elliott wave, even though it's pretty sloppy, right? It's a pretty good looking Elliott wave. We got the 1, the 2, the 3, the 4, and now the 5. And now we're kind of within this ABC retracement, right? We have this A, B, you know, looking for that C retracement somewhere down in here. And then we're going to continue to look for the continuation of this pattern higher, right? And that was kind of the Elliott wave lesson that we were going over. Now, with the Fibonacci, let's look at it in the other direction now. So let's go back a little further and look at the other direction of the downtrend, the downtrending Fibonacci. And I'm also going to now utilize the extension level just to show you guys the power of these ratios. All right. We're also going to zoom it down. There's always waves within waves, right? But when we're looking at the wave, you know, I could go 1, 2, 3, you know, 4, and then 5. But we're going to go on a smaller scale here. We're just going to zoom in a little bit and try to get down on the details so you guys can really understand how to utilize the Fibonacci retracement tool. So we have some lower lows get created, and then this lower low gets created here. Okay. I want to take my Fibonacci. This is the higher, this is the lower high, this is the lower low. We draw our Fibonacci you know, tool out, and it does give us the retracement level, right? So you have your lower high and your lower low. You draw your fib from boom to boom, and it gives you that retracement level. Look, price does not retrace up to any of those levels. It continues to trade lower. Lots of selling volume here, you guys. So what does it do? It makes another lower low here. We take our Fibonacci, we take it from that same high, because we don't want to, this right here, like this price action right here doesn't give us a good enough high to want to look for a retracement here. So we take it from here to now here, this low right here, and we extend it outward. Now, what do you notice here is lots of selling price action. The candlesticks are printing bearish. And then we have the support here at $1.10. Price trades right back into where? The 382 rejects, trades a little higher, all the way to the 618, which is where we have another resistance here as well, right? Like if you look at price action, we have resistance here and hits the 618 and then just dumps off of the face of the earth. It hits the 618 and has an immediate selling reaction to the downside. Now, this is where we use our extension levels, okay? So notice that this is the range at which we are looking at the Fibonacci, right? We have a range from, this is the range 1, and this is the range 0, right? So this is the range we're looking within, is right here. These are the extension levels outside of that range. We have an extension 50 and 62%. Notice how the market trades into this level. Oh God, that is just so pretty right there, man. Where the market, once the market reacts from the 618, it trades lower and reaches the extension of that Fibonacci. Notice how it finds buying support. It finds some support at this level right here and trades higher for a little while. See how it just finds support here and then it doesn't come back to it till about 15 days later. And so there was some initial support at this extension level. You can use these extension levels for trades, reversals, and potential targets for your positions, whatever that trend may be. I love the extension levels. They're super cool. The extension levels are really cool, super dope. Right. Now let's get a little more, let's zoom in a little bit more. I'm going to get rid of these zones, right? We're looking at that kind of that higher time frame. Let's look at the smaller stuff here. Okay. We're in a downtrend, right? We have our let's just look at it. We have a lower high and a lower low. Let's draw the fib tool from there to there, guys. Let's see if we can get a trade. Boom. Look at that. 50% retracement right here for a sell. See how in depth you can get this. And then what do? Our target, look at the extension on that. Look at the extension on just that, on the smaller view, right? We draw it from lower high to lower low. It retraces 50%, which was our other support here that turned into resistance. And it sells to the 50% extension level of that Fibonacci. God, I love this so much. It is so cool. Let's do it again, right? We have our lower high and we have our lower low. Let's take a fib from there to there. Let's just do it. Boom. What do we have again? What do we have again? Another 50% retracement. And where does it go to? The 50% extension level. Man, this is fun, right? So boom, it supports. What do we have here? We have what? We have another lower high and a lower low. We take our Fibonacci. We draw it out. Okay. What are we looking for again? We're looking for the continuation sells. Boom, it hits the 50%. We're in the trade, right? Trade only goes for 14 pips. And then boom, it just blows right through the stop loss, whatever that stop loss may have been. So the downtrend is now shifting to an uptrend. We notice that this lower high gets taken out here by this candlestick. So now we're like, okay, we're seeing a little bit of a retracement. Now you pull out that fib, right? You say, okay, boom, we have the higher high and we have a lower high. We take our Fibonacci, we draw it from here to here, we extend it outward, and we look for that buy position now, right? So boom, what does it do? This candle hits off the 50, trades lower, and finds what? Support at that 50%. And what do? Our target is what? The extension of that Fibonacci. The target is that 50% extension. It goes exactly to that 50% extension and then sells off the map. Now, remember what we were looking at. Remember what we were looking at on that higher time frame. We were looking at that larger sell that hit the 61%. Woo! I just gave you guys the sauce on that. I literally just showed you the sauce on that Fibonacci. That is how you can take advantage of the Fibonacci tool right there. Just within those trade opportunities. I don't have to go any further. That is all I have to go over. You can use this on every market, on every time frame. And the more and more you utilize it, the better and better you get with this tool. It's sometimes difficult to stick with a trading style that works. Like there's so many styles of trading that works. It's hard to pick one and just run with it. The Fibonacci is one that you should definitely keep in your arsenal. Keep it in your pocket, utilize it, practice with it, take trades with it. And if it's making you money, do not stop and do not change your trading style. Guys, that's the Fibonacci retracement Fibonacci tool. I hope you enjoyed this video. I'm going to go ahead and end it here, and I will see you all in the next one. Peace.